It's the midweek edition of Business Morning. Good morning and welcome to the program. I'm Amy John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's look at what's in the news now. The Nigerian Export Promotion Council says it is collaborating with the Commonwealth Secretariat to develop a seamless and reliable data on export services in the country. Speaking at an inaugural meeting in Abuja, the executive director of the council, Mr. Olusegun Awolowo, who was represented by the deputy director of product development, Mr. Williams Ezago, says that there is no readily accessible and reliable data with regards to trade-in services. Do take a listen.
Collection of data, as you all know, it's difficult to collect data in services. If you export physical product, and the custom will take entry and record it. But in services, it's a challenge that we don't have it. Even nationally, most of the statistics we are collecting for services is inaccurate. Sometimes it's not correct. So this platform support the Commonwealth is giving us is to help us to capture data, to create, and that's why actually what we are doing today is inauguration of the committee. Of National Committee on Trading Services, whereby all the relevant MDAs in Nigeria that has to do with collection of statistics, management of statistics, are members.
And a deal has been reached in the acquisition of Retail Supermarkets Nigeria Limited, owner and operator of ShopRite stores in Nigeria. The deal follows the approval of the Federal Competition and Consumer Protection Commission for 100% ownership by an indigenous firm, Ketron Investment Limited. The company in August 2020 announced that it will be exiting Nigerian market after over 15 years. Despite selling its equity stakes in the Nigerian subsidiary, ShopRite says it will offer a franchise arrangement with the Nigerian owners.
And the newly commissioned Heirs Life and Heirs Insurance companies will change the landscape of the insurance industry in Nigeria. That's according to the governor of Lagos State, Mr. Babajide Sanwo-Olu. He was speaking during the commissioning of both companies, affiliate of the Heirs Holdings in Lagos. To take a listen.
Heirs Towers in Victoria Island, Lagos State, a 5-story building housing 2 companies, Heirs Life Assurance and Heirs Insurance Limited. After 7 years of planning and strategy, both companies are officially opening their doors to the public. Lagos State Governor Babajide Sanwo-Olu is here to grace the occasion. Chairman of the group of companies, Mr. Tony Lumelu, is not unaware of the challenges they may face, but is confident of the offers the companies have.
We come with a strong tradition, a strong track record, not just of governance, but of business success and business turnaround, and most importantly, wealth creation for all. We believe that prosperity should be democratized. We believe that success for us, indeed by God's grace in this business, will not just be the profit we make for shareholders, but will be the impact we create.
With the level of capitalization of these companies, Heirs Life and Heirs Insurance, I have no doubt that the Nigerian insurance market is poised to write big-ticket risks.
In addition to this achievement, Governor Sanwo-Olu commends the contribution of Mr. Lumelu towards the development of African youths.
When leadership of a holding company believes that the wealth that we've made, it's not about yourself, it's not about your family. It's about giving hope to the hopeless. It's about giving hope to the vulnerable, to the people that deserve and require it like yesterday. And we know that they're changing lives, not only in Nigeria, but in the whole of Africa.
The management of the companies are excited by the number of products they have for people across all strata.
We have a bouquet of new products that we are bringing into the market, simple products. And definitely we also have those conventional products that we are actually that we have customized.
And then we're going to have simple products that is affordable to every individual, regardless of your age, your class, your gender. So we have products for everybody.
With this official commissioning, the companies say everyone can now access their products, which they insist are now in the market.
And oil prices rose today after OPEC and its allies stuck to their plan to cautiously return oil supply in June and July, while expecting fuel demand to rebound strongly during the U.S. summer. U.S. West Texas Intermediate crude futures rose 32 cents to $68.05, extending a 2.1 gain following the Memorial Day holiday in the United States. Prices rose to their highest since October 2018. Brent crude futures climbed 37 cents to $70.62 a barrel after jumping 1.3% overnight. Yesterday, OPEC Plus agreed to keep their plan to gradually ease supply curbs through July. Market gains over the past 2 weeks have been capped by concerns about a potential lifting of oil sanctions against Iran as talks on reviving a nuclear accord made progress. However, negotiations hit a roadblock this week. Two Western diplomats and an Iranian official said the talks would likely take a pause on Thursday, but it's unclear if talks would resume before Iran's June the 18th presidential election. Well, to highlight some likely impact of the decision of OPEC Plus is Babajide Atolagbe, investment risk analyst with Afrinvest Asset Management. Good morning, Mr. Babajide. Thank you so much for joining us this morning.
Good morning. Thank you for having me.
Yeah, so OPEC Plus' decision was the projection of a lot of analysts, so this shouldn't come as a surprise, and this follows increases in May and June. This would amount to a total rise of 2 million barrels a day over the period. Which way do you see the market swinging after this decision? And bringing it back home to Nigeria, what should we expect?
For the oil market, the oil market is currently in the bullish phase as we speak, with price, hovering around $65 to $70 per barrel. And this is in a positive sentiment, which is largely backed by economic fundamentals. Practically, 2021 has been a decent year in terms of economic recovery. And this is due to improved vaccination exercise as well as reopening of economic activities. So this has kind of forced critical sectors such as transportation, manufacturing, aviation, and a couple of others, that revived activities in that sectors. And these sectors are basically energy driven. And looking at data from the likes of International Energy Agency and OPEC, they've showed us that oil demand has actually improved, materially over the last couple of months. And then the output for oil demand is kind of positive in the short to mid-term. And also we need to look at it from the supply perspective again, in order for us to be able to see where the market is heading to. Production cut by OPEC countries, has supported the market over time. And currently we are beginning to see, countries improve their production output. And this is as planned by OPEC countries. And this is due to, in order to meet up with rising demand. So that has been the major sentiment driving the oil market lately. But going forward, some people, some analysts believe that Brent may eventually hit $80 per barrel sometimes in the year. And this is where our own intelligence comes in. So we believe that the downside risk factors, which I will speak on shortly, may not make us see a lasting bullish effect in the market. And the first is that supply is relatively pressured. Like you mentioned, Iran might be coming back to the market anytime soon. And that would also mean that we might be having excess oil in the market again. And then that balance we may lose that balance. Also, the likes of US shale producers are also people that we should also keep our tabs on, because producing oil in that space is kind of cheap. And then there's currently an incentive to produce more, given the fact that prices are relatively doing well. So on the supply side, there are a lot of factors that are likely to pressure demand in the short term.
All right. So, Mr. Atolagbe, the group has flagged, rising COVID-19 infections in India and Japan as one of the reasons for their caution, and also Iran's possible supply back to the market. Can you give us the likely scenarios from this?
For the case of India and Japan, these guys are industrial nations, and they depend largely on energy in order to drive their industrialization process. And it is kind of worthy of note that these guys also control significant chunk in terms of energy demand. And given the fact that there's a new COVID-19, there's a COVID-19 variant in that space, which may actually affect, the reopening of economic activities. And that would also affect oil demand from these countries. So it makes sense for OPEC Plus to also consider that in their decisions for cutting production. And for the case of Iran, Iran is a big player in terms of supply. And, one of the reasons why we believe that prices have been reasonably stable over the years is because Iran has not been participating at the official market. But sooner or later, once they're able to complete their deal with the United States of America, they might be returning back to the market, and that might, set some sort of supply glut to the market, and we might have, an imbalanced market once more, and then prices would largely suffer from that actions.
Okay, so the Nigerian National Petroleum Corporation has announced plans to acquire stakes in 6 private refineries across the country. So it's not just about Dangote Oil Refinery. And there seems to be a lot of criticism about this, even though it seems to be a common practice in other parts of the world. What's your take on this plan?
The NNPC's involvement in private refinery business is a good development. One of the roles of the agency is to ensure energy security and to stimulate economic growth through partnership, and also ensure that the resources of the country are best managed in the interest of the people. So essentially, I think one of the best ways of achieving all of these objectives is to make sure that you have your skin in the game. And I'm sure a lot of free market enthusiasts may not welcome that development, because they believe that once government begin to involve themselves in some particular sector, we may not see some sort of productivity or efficiency in that sector. But in this case, I think that may not be the case here, because 20% stake is an ideal stake. It doesn't give the government control in terms of management and influence. However, it just provides them the necessary presence they require across the value chain of the most important asset of the country. And on the flip side, the announcement may actually discourage new entrants into the refinery business, because one of the biggest risk factors investors are wary of is the political risk, and in this case, it could be as a form of nationalization of private assets. And the NNPC came out to announce that it's 20% plan in terms of stake. Over the next couple of months, years, could the bar be raised to 40%? Could it be raised to 50%? Could it even be raised to majority stake? So these are questions that I'm sure investors might want to consider before that sector.
Yeah, because a lot of people are saying, if the government has how many refineries, and talking about rehabilitating the Port Harcourt refinery, we have not even seen the efficiency of this one, then what will they be contributing to the private ones?
You're right, because Nigeria as a country, we have a couple of refineries that has been that many intelligent guys and experts are considering still, given the fact that these refineries are not properly financed, they're not properly managed. Many of them are not even producing at the initial capacity. So that simply tells us that the government, in a way, has not been able to efficiently manage the resources at their disposal. So, and then the NNPC now coming to buy 20% stake in private businesses who are committed to driving efficiency, improving productivity, so that we Nigerians can have the best result from that space. I'm actually raise questions, and I'm sure investors would not be happy to see that play out positively. Well, do I think it's going to be a success? Because it depends largely on the commitment of NNPC. First things first, is just a plan. And in this country, we've seen a number of plans that have remained plans for a number of years. And so if the NNPC is actually serious and committed, it will be largely implemented. But on the other hand, I believe that the business owners are the major deciders of this particular plan. If it is fine by them, they will have it. And if it's not fine by them, it might just be an issue that might linger around for the next couple of months or even years, I would say.
All right, given these developments in the oil space, and also with, big oil players moving to greener sources of energy, what's your expectation and outlook in the short term?
In the short term, I would say expectation is still largely bullish, because transiting from traditional energy to cleaner energy will take a lot of time, take a lot of investment, and then I believe we still have time to tap more resources from the current space. And let me bring it down to Nigeria for proper context. So I think the current bullish run in the market will put smiles on the faces of the Nigerian government. I'm sure you agree with me, because it gives them the opportunity to improve oil revenues and also support the FX reserve through FX inflows. I remember that the oil revenue, the 2021 budget was on the assumption that oil will average $45 per barrel for the most of the year, and oil is currently above $70 per barrel. This would mean that there's excess revenue. The government will have the flexibility to finance unplanned obligations, take on new projects, and also reduce the fiscal deficit. So I think in the short term, Nigeria is well positioned to enjoy the party we are seeing in the oil market. And it is also worthy of note that we need plans and policies to be set in place so that Nigeria can also transition from oil energy, which is the traditional energy, into cleaner energy. So when that transmission happens at the global level, Nigeria will not be at the back end trying to find their feet.
Yeah, but you say Nigeria will be having excess revenue, but also comes extra cost, because we're still importing the refined products that we use. So we need to balance that out.
Yes, we need to balance that out. And I think it will be more of much revenue, because like I mentioned, oil at $45 per barrel on the budget and currently at 70, that's an excess. And then let's not forget that the CBN had just recently, technically devalued the Naira, adopting the NAFEX rate as the official rate. And that would basically imply that, more revenue inflow, given the fact that more Naira inflow in terms of revenue, given the fact that the exchange rate has been improved to around what's it called, 417 Naira to dollar. So basically, I think it's more positive for the government and for the people. Just to put into proper context, it might be a bit of challenge for the people, because remember that we're already transitioning into a no subsidy environment, and Nigeria is trying to allow the market forces to determine the prices of fuel, and that might continue to pressure or put more pressure on local prices, because as Brent continue to rise, which is the primary commodity, it may affect the pricing of energy products such as fuel and and kerosene and the likes. And the major implication on the citizen is that might translate into some sort of inflationary pressures. That might put pressures on the local economy, and then that might continue to worsen the macroeconomic fundamentals of the country. So that might be the downside risk to rising oil prices. But on the general ground, I mean, it's a reason to to smile about for the Nigerian government.
All right, Mr. Atolagbe, before we let you go, let's move to other issues now. The estimated cost of lifting 100 million Nigerians out of poverty in 10 years is put at $1.6 trillion. Can Nigeria afford this, at a time when remittances are actually dwindling?
It may be a bit challenging to actually, be able to take on that kind of responsibility. But I believe that if the government is actually, serious about taking Nigeria out of poverty, if they can prioritize this as a major, one of their top agenda, I think it can happen. And there are plenty of ways to making that happen, because you could also one of the ways you could do it is not necessarily by by money. So it could be as a result of policies which would make businesses to thrive, and then improve the standard of living of Nigeria. So, aside from the financial aspect, I think policies and implementation, and also, setting the priorities right, and then we all having a common agenda that we want to leave Nigeria, and want to leave Nigeria out of poverty over the next couple of time frame. I think that is quite achievable.
Atolagbe, I guess we'll have to leave it there now. Mr. Babajide Atolagbe is investment risk analyst, Afri Invest Asset Management. Thank you so much for your time.
Thank you.
All right, so after the break, we have AFEX Commodities market updates. Do keep it here with us on Channel Television. This is Business Morning.
You're welcome back to Business Morning on Channels Television. Well, at the AFEX Commodities Market in the week ended 31st of May 2021, it was a very active one. Deals, commodities index, as well as exchange index were all in the positive. We have Michael Martins, portfolio manager at AFEX, to give us details. Hello, Michael. Good morning. It's another week.
Hi, Ini. Good morning. Thank you for having me once again.
Yeah. So bring us up to speed about activities. It was a very active week in the market.
Yes, it was. So if you look at the table in front of you, the total value of transactions traded on the exchange went up in the week under consideration by a factor of 149, from around 0.01 billion naira to close the trading week at 1.005 billion naira. The total number of contracts traded on the exchange also went up by a factor of 119, from around 537 contracts to close the trading week at just over 64,000 contracts. The total number of deals that happened on the exchange in the week under consideration also went up by 279%, from just 14 deals to close the trading week at 53 deals. The AFEX Commodities Index, which is the ACI, also went up slightly over the week by 1.20% from 399.07 to close the trading week at 403.07. The AFEX Export Index, which comprises of cocoa and ginger, also went up slightly over the week by 1.06% from 146.57 to close the trading week at 148.13. The total volume of contracts traded on the exchange went up significantly in the week under consideration, with maize being the major protagonist, which went up from just 331 contracts to close the trading week at over 63,000 contracts. Cashew was also another commodity that traded up in volume in the week under consideration, from around 127 contracts to close the trading week at 725 contracts. With regards to price changes with commodities on the exchange, we only saw increases in the price of maize, which went up by 2.31%, gaining 447 naira in the contract value to close the trading week at 19,809 naira per contract. And also cocoa, which went up by 2.30%, gaining 2,000 naira in the contract value to close the trading week at 89,000 naira per contract. And lastly, but certainly not least, we have the fair trade exchange traded commodity, which remained unchanged at 14,008 naira per contract. And as we always say, if you want to know more about commodities, you can go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, whether that's spot contracts or fixed income products, you can download our app, which is available on Google and iOS.
All right, so Michael, what factors would you say are responsible for the performances recorded in the ACI and the AAI, respectively?
So if you look at the constituents of the ACI and the AEI, they are largely due to the fact that we saw significant price increases in their constituents, right? So if you look at the season till date return on investment for somebody who would have bought the ACI at the beginning of the season, and I think I have a few numbers here, the season till date number for the ACI, which comprises of maize, soybean, paddy rice, and sorghum, is 49.02%, and for the AEI is about 5.76%. With the ACI in particular, we've seen a long bullish movement in the price of the constituent commodities. So, for example, with maize has done between 26 to 30% this year alone. Soybean has done extremely well this year alone, doing as much as 60%. For paddy rice, we've seen a slight increase of just about 5.76% from season till date. And then with sorghum, we've seen a price increase of just about 12 to 13%. Give or take. So those are largely some of the factors that have driven the performance of the ACI. With the AEI, which is the AFEX Export Index, which comprises of cocoa and ginger, their performances have largely been due to what has happened in the ginger and cocoa market. And I would argue that maybe even the performance of the AEI was as high as 18%, I believe, in the month of March, but then it sort of dropped significantly because of the adjustment from main crop to mid crop, which sort of has a smaller bean count, accounting for the discounted price. Hence why you see the return of the AEI not being as large as that of the ACI. And it's also the case that the season for the export commodities tends to start slightly earlier than you would have for the commodities that you have in the ACI, which are essentially grains.
All right, Michael, it's planting season. What's the outlook for price movement?
So one of the dynamics that you would see, or some of the dynamics that you do see play out in the commodities market, is that there has been a shift of narrative, like you said. It is planting season, and a lot of the farmers are currently focused on cultivation of commodities as opposed to the normal trading activities that you would see in the market. So a lot of them are currently looking to buy inputs, looking to increase their productivity, and of course, by extension, increase their income. With regards to its effect on prices, so what we saw in the last month was significant consolidation in the market, where we saw no more than a 5% increase in the price of certain grains. So maize only did about 4%, soybean did only about 3%. If I'm to give an outlook for the month of June as regards what the effect of planting is going to be, I think we're gonna continue having a fair period of consolidation before prices increase significantly, only to adjust when harvest comes into full play.
So we've seen an undulating level of activity on the exchange in recent times, with some weeks having a lot of activity and very often followed by a week of low activity. Can you explain why that's happening on the exchange at this period?
So thank you very much. So I believe that's largely symptomatic of what is currently going on in the commodities market itself, because you have to imagine that the exchange is by and large a representation of what is going on in the commodities open market. And essentially what we are seeing is very little trading activity across the board for all the commodities covered by the exchange, and that spans from maize to soybean to paddy rice, sorghum, and maybe even some other export commodities. And so that's largely why you see that there are certain weeks where you see a high number of activity, a high volume of activities happening on the exchange, and there are certain weeks where you would see very low activity. But to really explain the situation, the most liquid commodity on the exchange, and by extension the open market, is maize. And maize tends to be the major driver of activities on the exchange. So it is the case that when you have a period, or when you have a week whereby you have significant maize activity, it tends to be reflected in the numbers that are reported on the exchange. And when you have weeks where you have low market activity for maize, it's also reflected in low activities generally on the exchange. And because of that, maize is by far the most traded commodity on the exchange, and even also on the open market.
All right, Michael, maybe I'm going to have to hold some maize, Anyway, following the Ramadan and Kaduna shutdown and the, insecurity issues around the country, how did it affect the commodity market prices?
So I think we've discussed a bit about what the effects of Ramadan on commodity prices. So I believe by and large Ramadan had a muted effect on commodities prices this season, in comparison to last season, where we saw a slight price hike in commodity prices for that same time period between April and May. But this season, we didn't particularly see that same dynamic play out. It was the case that the price hike that we expected in the month of May had already happened earlier in the months of December, January, and then maybe even some parts of February. So there wasn't really an incentive for people to hike prices during the month of Ramadan. And even at that, only a few commodities would have been affected, and that would be maybe paddy rice. With regards to the Kaduna crisis / the labor issues that they had, I don't think it had any sort of significant effect on the commodities market, largely due to the fact that the crisis itself was short-lived, right? I don't think it lasted more than a week, and just because of that, we didn't really see that much effect on commodities prices rather. And it's also the case that the timing of those events also mattered, right? If they had happened when maybe during the harvest periods of October and November, maybe you would have argued that we would see a more significant effect on the commodities prices and maybe by extension the commodities market. But it was the case that they happened, both the Kaduna crisis and the insecurity issues that we are having in the country, they happened when there was very little trading activities going on in the commodities market, at least in comparison to the months of October and November. So the effects were not really felt. And it was also the case that even with the insecurity issues, the effects might have also affected logistics, with some logistics prices going higher. But even this year, that didn't happen. So it might have been the case that the only effect was that certain logistics companies who help transport commodities would be unwilling to go to certain locations because of the attendant insecurity issues that are there. But even at that, like I said, because there wasn't that much trading activity going on in the market in the first place, it didn't really have that much of an effect.
So, Michael, I mean, when you come on the show, you also talk to interested investors, in AFEX. At a time like this, when inflation is a major discussion in the country, how much of a hedge is investing in your commodities market? How much does it give to investors?
So I think it is the case that we have established that there is a significant correlation between inflation and the commodities market. But even beyond that, for retail and maybe even institutional investors that are trying to design their portfolio, I think that the commodities market serves as a significant edge, but more so another opportunity for you to gain a very high return on your investment from a risk-adjusted perspective, right? So look at some of the numbers that I've thrown out today already, with maize doing 30%, with soybean doing 60%. I'm not sure that any other asset class at the moment is doing that good a number. And what that means for you is that if you're constructing your portfolio and you have fixed income products and you have stock and you have equity products, it's also the case that it now becomes necessary for you to actually consider, adding alternative assets, to that particular portfolio, because it just makes so much sense, right? Because it's like you're playing in a space whereby, first of all, you can make significant impact by every dollar, every naira that you invest. Secondly, you can also make a significant, return on your investment in comparison to other asset classes. And thirdly, it's also the case that the commodities market in comparison to all those other asset classes, they're fairly predictable. I mean, I've talked time without number about how the supply and demand dynamics of the commodities market tends to play out, right? You tend to have significant supply at harvest. That supply tends to decrease as the time horizon lengthens, causing prices to rise significantly. Now, you may argue that it may not be the case that you can say with absolute certainty where prices are going to end or what prices are going to be at a particular point in time. But it is undoubtedly the case that in any given commodity season, prices are going to go up significantly. And if you have investment products, which we have created at AFEX Commodities Exchange, that allows retail investors and also institutional investors to partake in the commodities market without taking into account any of the attendant risk in the commodities market as with regards to holding the physical commodity itself, I think at this point it's just a no-brainer. If you're an investor right now, whether or not you're retail or institutional, and you don't have commodity investment, investments in your portfolio, I think you're doing yourself a big disfavor.
All right, Michael, I like those numbers, and I'll look into my portfolio after this. All right,
Please
Michael.
do, laddie. No, you always say you will, but I never see any numbers.
That's a challenge.
I never see any numbers.
Michael, it's coming.
Laddie,
it's coming.
Put your money where your mouth is.
Don't worry, after the show, I'll do that. All right, Michael, thank you so much for the update. Michael Martin is a portfolio manager at AFEX Commodities. All right, we'll take a moment now. Business Morning returns shortly.
Oh, you're welcome back. The bear is back at the equities market, Will. I thought the red days were over, at least for some time, but it didn't take so much to get the bear back into the market. I wonder where we'll have to go now, or is it still the market correction, or is there anything we're waiting for, we're expecting to bring a boost into the market, Will?
Good morning, Nini.
Good morning.
It's like you've said it. What the gains we saw on Monday, it seemed like a mirage. And the more we look, the less we see. And like some analysts have captioned it, it's a new month, but it's the same old headache. Let's look at the market numbers. The all-share index declined by 0.06% at 38,404.37 points, while the equity cap was at 20.022 trillion naira. And we saw we saw a turnover, we saw a higher turnover in volume, values, and deals. Volume was at 200, was higher by 36.2% at 274.85 million, while the value was 2.63 billion naira, and we had deals all traded in 4,159 deals. Talk about this bread month we're having. We have Phil Anegbe, he's a research analyst at Cardinal Stones Securities. Good morning, Phil. Welcome to the show.
Yeah, good morning.
Hi, Phil. We started last month, we ended last month in a positive in the green, but this month is in the red. What would you describe the sentiments in the market right now?
Well, I think sentiments in the market are a bit weak, and of course, markets are still reacting to rising fixed income yields. You can get close to 9% for 1-year paper in TB, about 6% for 6-month paper, largely risk-free, right? So as opposed to taking the risk of equity. So markets reacting to that. And then we have very limited corporate actions or things that could induce investments. A number of stocks have actually gone past their ex-dividend date. So that excitement around dividends is also off the table. And of course, offshore participation is also gradually coming in thanks to higher oil prices and harmonization of official and IME rates. But then it's not strong enough to actually take the market into a green. But we still believe that over the medium to long term, there are still strategic opportunities for those who are looking at fundamental investments. So you could see some bargain hunting and cherry picking for investors who are more fundamentally inclined.
Thank you, Phil. Thank you for your input on the program. That's Phil Anegbe, research analyst at Cardinal Stone Securities. Now back to the numbers. So that in the sectoral performance, largely negative. The sectors we track, the banking, consumer, industrial goods, insurance, oil and gas. Only insurance was the gainer. Oil and gas was in the red. Insurance was boosted by the stocks from WAPE, Clasaco, and Consolidated Oil Insurance with plus 1.51%. That's a huge boost to that sector. And over to the unlisted markets, the NASD Securities Index was up 1.03% at 756.72 points. The market cap was at 537.89 billion naira. The volume was up 1.29 million points. We had the value at 34.09 million and all traded in 37 deals. We move on to the fixed income market where we see the bonds market. The bonds market was quite bullish. The average yield was the average yield contracted across the fields. It contracted by 2 basis points to 12.4%. We also see that across the curve, the average yield was flat at the mid-range, but and this was due to the demands for the 2027 and 2049 bonds. Also, it was traded in 10 deals, and we have 4.20 billion naira worth of these bonds. But to talk more about it, we have Chioma Udu on the line to tell us more about the market. Chioma, what can you say? In the normal market, the average yield expanded to 6.6 basis points. What is driving the mixed sentiments in the fixed income market, despite the over maturity of over 55 billion naira coming to the system yesterday?
Well, I think the thing is still driving the fixed income market. The treasury bill space, we've seen a considerate activity on the long end bills, especially in the March 15 and 20 May bills. Well, few trades have been consummated because of the liquidity strains, although we've seen some liquidity creep into the market. As a result of that, we've seen rates trade at about 9%. In the bond space, the market was quiet. We've seen few interest recorded on the 2045 and 2049. Also, to remain scarce at the mid to long dated bonds, but we've seen improved rates at the 2023. But few trades are still being consummated because of the liquidity strain in the market.
Thank you, Chioma. What would you say? What's the outlook for this month? What do you think is going to happen? It's been pretty quiet. And what's making investors careful, cautious about taking this?
Well, investors are a bit careful because of the returns they're getting on this asset. Inflation is at 18%, 18.12%, and our assets are trading the short-term end of the curve are currently trading at about 10%. And then the bonds, which is duration, is at 13, 14%. So it's still not an impressive yield in relationship to where inflation is. But with what the CBN is doing, trying to stimulate the economy, we expect that we'll see more interest in that space in the near term from investors.
Okay, Choma, thank you so much for your input. That was Choma Udu, fixed income dealer, GT Bank. And that's it. That's it. That's
All
it.
Right, Will.
That's it for the market.
Yeah.
That's how the market is rolling this week. We're hoping for a positive outlook in the coming days.
We always hope for better. Thank you so much, Will, for bringing us up to date in our activities in the market. Well, we'll take a break now. When we come back, we'll do an open call to London. Do stay with us. Moving over to London now. Hello, Juliana. Good morning. And talks have started by 11 members of the Trans-Pacific Partnership concerning Britain's entry into the regional free trade agreement. What are the possible outcome of this talk?
Well, the positive outcomes are good. This is a massive opportunity for Britain as it's trying to kind of shift the centre of economic activity away from Europe into other parts of the world. And there's no better place to do it than Asia, considering it does have some of the biggest populations consuming lots and lots of goods. I believe the PPTP partnership union, which consists of about 11 countries. Trade between that bloc and UK in 2019 was worth over £100 billion. And now, of course, the UK want to try and foster a free trade relationship with the bloc. The formal application process began in February, and much earlier today, the Japanese economic minister, who's currently chair of the bloc, did say that they are formally going to allow Britain to join forces with this. So this is great news. Blue tick for Liz Truss, the Trade Secretary, who's been marching all across the world trying to get as many trade deals signed post-Brexit as she can. And it comes at a great time because, of course, next week, Britain is hosting the world leaders for the G7 summit.
Another good news is there was no case of death from COVID-19 yesterday in the UK. So the anticipation for Freedom Day, June the 21st, builds up. How is the market preparing for this?
Well, we're not out of the woods yet, certainly not any. And even though I've got to say 0 deaths, it is a significant milestone. I think, the media here and ministers have been cautiously optimistic, not overplaying this because, of course, we still have the worst death rate in Europe. Nearly 130,000 people have died of COVID. And unfortunately, it was a bank holiday on Monday. So typically, statisticians, they're Monday to Friday, 9 to 5ers. So early in the week, you don't really get a full perspective. So we don't really know if nobody died on that day. But it is a milestone. Are we going to be unlocking on June the 21st? I'm not sure. I don't think so. Nicola Sturgeon, the First Minister of Scotland, kind of withdrew the Scottish plans to ease all the lockdowns. Last week, PMBJ did say that the data doesn't say we shouldn't, but as we've seen with this Tory government, they usually do things very last minute.
And catch-up plans to support children in England who have fallen behind will cost £1.4 billion over 3 years. What's that plan?
Well, the plan comes under this 3 T's, guys, which is extra time, extra tuition, extra teaching, and that's to assist with, of course, the millions of children who've been left behind, particularly those from less privileged backgrounds. So I believe £1 billion is going to be used to offer 15 hours of tuition. I believe there'll be like 6 million different 15-hour courses available. An extra 400 million is going to be put aside so that anybody that was doing exams, if you've been between 16 and 19 and you didn't feel as if you got a full year's worth of tuition, you will be able to do that. The bigger story is, of course, about extending the school day. That was a massive story put out by the media. I believe they said it's going to cost about £15 billion. We're not sure if the Treasury are going to give that the green light. But the opposition are not happy with this. They think it falls short from what other comparative nations are doing for their kids across the world.
All right, Juliana, thank you so much for the updates, and enjoy the rest of your day. So we'll take a peep now into the crypto market. Dogecoin got listed on Coinbase. Congratulations, laddie.
Well, congratulations to holders of Dogecoin.
Yeah, well.
Because who would have thought Dogecoin would get listed on one of the biggest exchanges in the world, that's Coinbase. Well, that's boosted the prices up about 20% this morning. Well, but the market cap will have $1.64 billion for the total crypto market. It's down 0.05%. 24-hour volume, $105.63 billion traded, down about 11%. Bitcoin dominance, it's going down there, down about 0.19%. Bitcoin this morning, $37,160, up 0.76% this morning. Let's talk to Gilbert Jopata now, digital market analyst. Hello, Gilbert.
Yes, good morning, Mr. Laddie.
Good morning, Gilbert. Well, the market is looking quite scary now. An analyst just showed us a possibility of the dreaded death cross on the chart for Bitcoin. If this happens, that could see Bitcoin drop as low as $20,000. What should traders be doing right now?
All right, first of all, I have reservation for indicators, but investors must be open to different market opinions as long as they are backed by analysis to help us manage risks. I personally looked at the chart myself, and I see the 50-day moving average and the 200 moving average is converging. So we will probably see a death cross in a matter of days or weeks if prices go down. But if prices go up, I think we are going to have a divergence at that particular moment. But however, I think we need to appreciate the volatility of crypto. We can see a 50% retracement and we are still in a bullish phase, unlike the traditional market. And yet we could also still have a death cross and we are still in the bull market. That doesn't mean we are in the bear market. That
But
just
Gilbert,
be a healthy retracement.
Gilbert, we've had the, almost 50% correction already, and they say when the death cross actually happens, we could see another 50% drop.
Yes, probably we could, but that may not play out if we have bottomed. So being conscious of that could be the downside risk which we have, but if we have bottomed and prices move up, I think we are going to have a divergence at that moment.
All right. I guess what could save the moment now is if the price of Bitcoin actually goes up from here.
Yes. If prices go up, we probably wouldn't see that.
Okay. All right. So how are you playing altcoins at this moment?
What was your question?
How are you playing altcoins at this moment?
Okay, altcoins are actually healthy right now and at the moment. There are possible altcoins right now that look very, very healthy for a takeoff. But however, we still need to look at Bitcoin, which is the gold market, because altcoin tends to do what Bitcoin does. So if Bitcoin stay healthy up to the upside, we are going to still see more healthy move of altcoins.
All right, Gilbert. I don't know if you have any Dogecoin in your portfolio, but if you do, congrats.
I only trade Dogecoin. I don't hold it as a long-term portfolio anyway.
All right, Gilbert. Thank you so much. The meme coin that became the serious coin. Thank you for your time, Gilbert. All right, Ini. There you have it, Ini. It's Doge Day today.
Yeah, it's Doge Day. Well, I wish I had.
Yeah.
I should be dancing by now. But anyway, that's it. Thank you so much for joining us on Business Morning today on Channels Television. I'm Ini John Mekwa.
And I'm Laddie Williams. Thank you for watching.